Everyone, it is the end of the day, February 5th, 2024 in the US. I'm Mish Schneider, Chief Strategist of MarketGauge.com, and we're going to start the week with basically what looks like a very interesting setup potentially for both gold and silver. We'll look at both, silver briefly, but start with gold. And with somewhat of a correction, not really terrible correction, what could be just really a pause before we continue going up on some disappointment about the Fed announcement next week. And of course, the growth stocks just continuing to do what they do, which is grow, which really has very little to do with two things: the state of the US economy and the cost of inflation. So this here right now is gold. And what we're looking at in the spot gold is that it's holding. Clearly, you can see the 50-day moving average right here. And that level that we've been talking about, what I love looking at on these charts that I show you with the candles is where wicks and bodies meet. So here we had, this is what they call a doji day. That's when the open and the close are the same, generally some sort of pause. And then, of course, we have really not been able to do very much all last week until we got into today. So what that tells you right here is that this low at 2044, which is basically where this is trading right now, as I'm talking to you right now, it's at 2043. So figure 2043, 2044 is going to be your big area to keep an eye on as we go into the next day. And of course, here is your 50-day moving average at 2039. So if you're really a short-term trader, you're looking at under 2043, maybe going to test the 50 at 2039. I wouldn't even be surprised if we saw it go a little bit lower, like to 2036, and potentially pop back through that 50, because that 50 has got an upward slope. But what happens now? Going down is one thing. We'll look at silver and get a better example of that. But if we do hold above this 2044 level, then you can see that as we had the doji day here, if we look at the bodies of the candles back here, and then the body of the candle on this day, which was Friday, the closing level there was 2053. So we go from 2043, 2044, 2053 would be our next point of resistance. And then I don't think we have any major resistance here to really be wondering about until we get to about 2067, 2068. And I still feel exactly the same way. We get through there, of course, then we're starting to talk about the highs of 2080 and then through 2100, whole new ball game. So even with all the negative talk and the higher dollar and the interest rates higher for longer, gold is still telling us that it is firm and lying in wait, as I've been talking about over and over so far in the last few months. Momentum, of course, is a little bit weaker. We just broke down under both the 50 and the 200, and the 50's been under the 200. But I'm not terribly concerned about the momentum here right now. I think if we started to break down under the Bollinger Band, I might get more concerned. And of course, it could just as easily pop over that moving averages. And what we really want to see on higher prices as we go forward is this momentum clearing the Bollinger Band. So the reason why we have to be aware in the gold market of potential weakness based on the momentum indicator I just showed you is that the momentum here went from a mean reversion, didn't quite go anywhere, and now is back below that Bollinger Band. The low of the Bollinger Band, though, was also here, the recent low at 2204, which is why that $22 is so important. So if we hold that 2204, and the momentum pops back up, that's a new mean reversion. And the only way this really makes any kind of serious move at this point, I think, would be two closes over the moving averages, and those are really pretty much higher up. Okay, looking at the crude oil chart, one would be interested to know about the fact that with all the news and potential in the Middle East, this would be down, although now it's actually up on the day from Friday's close. But also, from a seasonality standpoint, I saw a chart, and as you get into February, from a seasonality standpoint, that's very bullish for crude oil. So I would take the stance of it being more bullish than bearish. And if we just threw in some kind of a trend line here, which I'm not going to draw, but just follow my cursor, you could see that today it broke beneath it and then immediately popped right back above it. So in my own personal notes, I wrote that as long as crude oil stays above 72.56, then I thought that I would maintain my bullish stance. And of course, right now you can see also a doji day setting up here at 72.75. So we're holding. So keep that 72.56 in mind. Below, then we may have to take another dip down. And we really don't want to see a close much lower than the low from Friday, which was 71.79. So if 72.56 holds, then we won't see that. But if it breaks, then you have to keep your eye on that 71.79. And of course, today's low was even lower than that at 71.41. And so those are really the areas that you have to hold. Above 72.56, we of course will be looking at this sort of doji candle at around 72.75, 72.80. And as we're getting a second close and back into a bearish phase in terms of price under the 50, we'd want to see that reverse. And I would definitely think that we need to see more of a move back over 73.90 to think that this was just more of a correction than anything else. So above 72.76, we can go a little bit closer to our resistance here at the 50-day moving average at around 73.30. We get through 73.30. But above that 73.94, then we're really looking at, again, a move back up over 74.40 and so on. Think higher. And what would make us think higher in terms of momentum? See, these mean reversions, they haven't necessarily yielded huge moves up, but if you were patient with a good stop, you had this nice pop. Now, of course, we had that mean reversion to the downside a couple of days ago, and now this big correction. We haven't quite hit the Bollinger Band. And even though the momentum is slightly under the 50, it's just slightly under the 50 where the price is actually a little bit here below it, or more, I should say, below it. So that's kind of the situation, is that if we get back over that 50-day moving average, you'll see the momentum improve. And like I said, considering now that we held this low, and that's the low we really have to continue to hold, which is 71.80, probably where I'd put my risk point if I were going to buy, holds over 72.56, we get back through this 50-day moving average at 73.36, and I think we're back in biz. Here is the USD JPY relationship. And remember, just go back a little bit, we were talking about this inside day that never really reconciled up or down until we got that brief move for a couple of days here. And then, of course, Friday the dollar reversed. And now here we are basically at new recent high, not new high, but new recent high in the dollar versus the yen. And the dollar made a little trip over 104 today. It actually had quite the move over 104.42. So of course now you've got the momentum to look at, but the momentum is not nearly as strong as the price. Does that mean very much? Well, it could if this turns out to be a one-day type of event. And how would we know? Look how well this body here on the opening price lines up with the closing price that we saw on Friday. So the closing price on Friday was at 148.31. And the opening price today was at 148.37. So between 148.31 and 148.37, we hold that. Then it looks like the dollar can get stronger against the yen, and we'll take a look at a level of resistance in a moment. But if it breaks down under that 148.38 or 148.31, that whole area figure, under, let's just call it 148.30, then I think that this could be the momentum telling us that this was sort of pushed up here on fear of higher rates. And the reality of the situation is that it was kind of a one-day move and it's going to go back down. And if it does go back down under 148.30, then of course the first area we have to look at is 147.87. And then as we get some little bit thicker support, as we get down here at around 147.50, and then, of course, we can take a look beyond there. This doesn't move that much. This was actually a spectacular range expansion day. Now, if it gets back over and holds that 148.38, takes out today high at 148.90, where might it go? Well, we have to go back a little bit here and move our cursor to see what we had. Interestingly enough, this high right here was at 148.83, so that's definitely an area to keep an eye on as our next major support at 148.83. I'm looking at right here, by the way, my cursor moved. With today's high being, as I mentioned to you before, 148.89. We get through that 148.89, 148.83, 148.89, then we're looking now at the next really big area of resistance, which I believe could be as high as 149.70. And talk about your inside day. Here we are having one in the SPY, or in the SPX. So of course that makes the outside day range important, the high being 4,975.29 cents, low being 4,907.99 cents. So which way that range breaks will be important. What's interesting is this is what they call a hammered doji. Generally, hammer dojis are interesting candle formations. They often mean that we're about to make a reversal, or at least a strong continuation. What we do know is that it's not going to sit here very long. And I also think it's interesting that this hammer doji lines up perfectly with the closing price of Friday, which was 4,958. So 4,958, that's going to be our pivotal point. We get above it, obviously this market still wants higher. We break down below it. Clearly you have to be looking now at what happens here underneath this low, which is the 4,907, in order to see any kind of substantial correction. And even a substantial correction could probably bring it down more to around 4,870 before we would have another look. Momentum is good. Although, as I mentioned to you, remember when momentum was stronger here, and here the price is much stronger, but momentum is weaker, it also ticked down a little, but it's not flashing me anything horrible yet. So we will keep an eye on that as well. Okay, that's it for now.